Welcome to our channel PH, where we discuss financial topics like trading and investing. We also talk about personal finance, like learning how to budget your money and or save it. If you're interested in any of these topics and want to learn more, please consider subscribing to our YouTube channel and hit the notification button to be updated in the latest videos that we will post. Before we start, just a disclaimer, this channel is not offering any financial advice and everything here is for education and entertainment purposes only. There are many strategies when it comes to earning money, and the things we talk about here are mostly from our learnings and personal experience. In the world of the stock market, there are thousands of people using different strategies to earn money. We can classify them into two main types of persons. Here we meet Mary. Mary opened a stock market account in an online platform with the expectation and purpose of having additional extra income. Her plan is to withdraw on a monthly basis whatever profit that she will earn from the stock market. Mary intends to use this extra income in paying her bills, support her other needs, and add on her savings. She also plans to add a portion of it to her portfolio monthly to increase her capital. Because of this, she aims to time the market and take advantage of the volatility or movement of the stocks. Before starting her financial journey, she did some research about technical analysis. She used indicators and studied chart patterns, including support and resistance. Mary also looks at the price action and volume of transactions to come up for the stocks she can buy. She is objective when it comes to choosing which stocks to buy, meaning whether the stock is blue chips or penny stocks, she will buy those stocks as long as she sees her indicators present on its movement. But before Mary buys more stock, she makes sure that the risk is within her tolerable rate. And because she is taking advantage on the movement of the stock price, she often checks her account and buys or sells stock frequently. This is why she uses a lower time frame on her chart, which is usually a day or hour or even just a minute time frame. Mary isn't always right with her analysis of the stock market. That's why she also makes sure to cut her losses within her tolerable rate in order to manage her risk. Now that we're done with Mary, let's move on to John. Like Mary, John opens an account but with a different purpose. He does not intend to withdraw any of his earnings soon. His plan is to hold the stocks he buys for a longer period of time. John will use his earnings to buy his dream house, support his children's education, and build his retirement fund. This type of long-term strategy leads to John choosing blue chips and middle or large capital companies in different sectors. He believes in stable companies' good performance and their continued growth in the future. John is subjective when he buys stocks and, unlike Mary, does not buy penny stocks. John studies different companies' financial reports, including earnings, performance, and stock value. John only buys stocks that he believes are undervalued but will increase in value in the near future. John, like Mary, does research as well. He watches the news for events that might affect companies' stock values. He monitors the disclosures and plans of the companies he's got his eye on, making sure that his losses are minimized. He also checks charts like Mary, though not as frequent as she does, and uses a higher time frame, usually a weekly or monthly time frame. John also adds a fixed amount on a monthly basis. Because John believes that the stocks he buys will rise in price, he regularly buys these types of stocks in the market. He uses peso cost averaging or the regular buying of a certain stock, especially when the said stock is getting cheaper. As long as he believes these stocks are undervalued and John believes that their performance will be greater in the future, he makes sure not to sell these stocks too early. Once a stock reaches its highest value, according to John's strategy, of course, this is the only time he will sell his held-on stocks for a major profit. Now, what do we call Mary and John? Mary can be classified as a trader, while John can be classified as an investor. To make it simple, let's see them again based on different categories. First is based in purpose, additional extra income for Mary, while investment for the future for John. Second, technical analysis is the basis of Mary's strategy, while fundamental analysis is the basis of John's. Third is Mary is active, frequently buying and selling stocks, while John is passive and buys on a monthly basis, holding onto stocks for a longer period. Both of them check chart patterns but uses different time frames, lower time frame for Mary and higher time frame for John. Fifth, Mary has no stock preference. As long as she sees her indicators and the risk is tolerable, she will buy them. John, on the other hand, only buys blue chip stocks that he believes are undervalued and have promising performance. Lastly, Mary cuts her losses when her trade goes against her, while John, using peso cost averaging, buys on the dip as long as he believes that there is growth opportunity in the future. John may also sell earlier in case his stock investment goes heavily against him. Both of them can earn and be profitable, but both of them also have risks. That's why risk management is very important and should be mandatory in any strategy, be it in trading or in investing. Both of them took the opportunity to earn from the stock market with different purposes and different strategies. Just also take note that these are just general characteristics and might vary depending on the person's preference. So, will you be a trader or an investor? You will only know once you enter the world of the stock market. But don't worry, you can be either one of them or also both. Just don't be the third type. And yes, there is another type of person in the stock market. The gambler. Entering the stock market without any research, knowledge, and trading or investment plan, you are like this person. True that gambling can be profitable once or twice, but it's better to do your homework before putting your money in the stock market or in any investment to have a higher chance of consistently gaining a profit without having to worry about big losses. Thank you, and I hope that you enjoyed and learned something from this video. See you in our next step in this financial journey.